First, a warm welcome, Kristen. We had a chance to chit chat a little bit just before the session started, and I was trying to remember when I last saw you in person, but it was certainly before the pandemic and could be 10 years ago. I know we met at a tonic impact investment conference, I think, or gathering years ago. So, anyway, it's great to have you with us. We tried over the summer and almost did it, but I'm glad that we got you here today. So welcome.
Thank you.
I was remembering and reviewing your bio that you started out not only in the education world, but in creating a charter school, which I shared with Kristen. My first involvement in impact investing was when I was still at JP Morgan, and I made an investment in a charter school company back in 1997. So we share a passion for education, and actually when I left Wall Street, I was thinking of starting a charter school company, and I concluded that that I didn't have the stomach for what that would entail and dealing with the challenges of the education industry. And I'm curious, now that you've worked in the belly of both beasts, the education world and the finance world, which one do you think is harder?
Oh, you're starting with the easy questions. I see. Okay.
Yeah, yeah.
So, in my graduate work, I studied systems change via institutions, and I definitely had decided at that time that of our major institutions where we can make change, globally, nationally, locally, we have the system of education, we have our government system, and then we have our financial system, economic system. And at the time in my 20s, I chose the system of education because I saw how change happened one person at a time, one teacher at a time, one lesson at a time, one connection at a time. And it's a big lift. And yet I could see, the intricacies of the system. Whereas having grown up in a trading firm in Chicago, where it was very transactional, very, one trade at a time over billions within seconds within algorithmic trading. There just didn't seem any poke holes or any places, at that time. Now, years later, and melding and bringing both of my worlds together, I see the power of investors, and we really do get the economy we invest into. And so I know we'll talk about this the whole hour, so I won't go on everything with this question. But if we wake
Yeah.
up the power of investors and have people feeling that they actually own what they own and can direct what they own to the things that the economy needs and that they care about, we will be able to transform our world.
Yeah, for people, I should have mentioned Kristen's father founded Hull Trading, which back in the day when I was in the trading business was one of the preeminent kind of early Chicago trading firms. And so she sort of grew up in that world as well. But share with us the sort of the foundation, the founding story, the origin story of NIA Capital, and when did you found the firm, and give us a quick sketch of what is NIA Capital.
Thanks, John. Thanks for the opportunity. And thanks you all for showing up for this dialogue. As we were prepping for this, I was told it was a friendly audience, and which is great. And I guess what I wanted to mention that I said to John and Rachel earlier is just it's really time for us to come together, those of us that want to see change, that want to learn about every lever that we can pull, places we can stand up. So I'm just grateful to everybody who's, stepping in and wanting to be part of this, and are probably leading things in your own right that I'll be looking forward to hearing about as well. So just a little bit about my background story is it's a little bit unique for one, just running an asset management shop as a woman is pretty unique. Just right there, just stop right there. Women-owned firms make up 0.7% so less than 1% of all asset management. So of the $84 trillion that are being directed right now, less than 1% is by a woman-owned shop. So what could our world look like, be like, if we change those numbers? It's almost unimaginable, and yet that's a goal of ours. When we combine that with people of color owned firms, we get to 1.3. So we're still hovering over 1%. And so, of course, I didn't know these numbers when I started. So I don't know if I would have, could have, should have done things differently, but I certainly didn't know. And so I'll just back up to say I grew up in Oakland, California. I live in Berkeley, so like 20 minutes from where I grew up today. And I grew up, as John mentioned, my dad started a trading firm in our garage, as one does in California. And so scrappy, literally on the backs of envelopes, writing algorithms, sitting at the dinner table or, in a coffee shop on the back of a napkin, sketching out ideas and sharing them. And so I was part of that dialogue and then part of that founding, and grew up. The conversations were not typical. They were about algorithms, commodities, derivatives, futures, soy. The definitely not what a typical person might grow up with. And the mantra at the dinner table and the backseat of the station wagon was buy low and sell high, and it was understood as frequently as often as one possibly could. And that's what algorithmic trading was. And so while I grew up in that firm, worked in that firm, it was a way to connect with my dad, certainly, continues to this day to be a way for me to connect with him. And yet it was very transactional. And it just didn't fit who I was as a person. And when I stretched myself to say, what is the positive impact we're doing? I could kind of say, well, we're providing almost insurance for farmers. They can sell their crop in the beginning before the seasons, and this was before we understood climate change. So, but you didn't know when all the rains were coming, and they could get a certain price now. But that was all still big ag. That was all, so it was there. It just wasn't fitting for me, like why we were doing this, honestly. And yet it was very valuable.
It reminds me, I remember when I was young in the derivatives business, and I was at my Thanksgiving dinner with my aunt and uncle in Maine and explaining to my family, extended family, how derivatives were the highway of finance and connecting all the different capital markets together, how this was making the world better. And I actually believed it. And there's truth to it. And there is truth to, financial futures are actually a useful tool for farmers to manage crop risk. But it's definitely a couple steps removed from the reality of what happens in the real world.
Well, I love you bringing that up because I do think that these are tools that we can use. It's just we're using these tools to amplify or exacerbate a system
Right,
that's already broken. So what
right,
if we did take
right.
futures to the regenerative ag? Like that's a whole wonderful conversation we didn't plan for today, but that's
Right.
one that I'm ready to have for sure. So I'll just back up and finish this history. So at any rate, I
Yeah.
worked in the trading firm and then I also became a classroom teacher. Um, and then I ended up teaching teachers and starting a charter school. And it wasn't until we were able to buy a building for our charter school. And then we ended up celebrating the opening and, having a community paint party. And we were all, fixing up the yard and, getting structures in place for the students. And we toasted with our sparkling grape juice, as one does in a school at that time. And people looked around and said, Kristen, how did you do this? And I had basically helped run the capital campaign without really thinking twice. I went into the bank and I negotiated, different loan prices, and I talked to some foundations and got some loan guarantees because I knew that the bank wasn't going to loan to a first time entity. And then I went to the city and I said, hey, we've got some man labor. I think I called it man labor. It was probably all woman labor, but at any rate, I called that and I said, hey, we're going to build these structures for the plate. But if, it's here, if you could just provide these, if you could do this, we could get the play structure up, it could benefit the community. I just went around and kind of scrapped this thing together and didn't think of the underlying skills that I grew up with, that I felt comfortable walking into a bank, that I knew that you just needed to get some bigger money behind you to get some money. And that's where the kind of the light bulb went off for me. And I said, you know what? These teachers, these families, this community has no idea how to operate in the world of money, and they don't know how to grow their own wealth, and they don't know how to do their investing. And I can't sit on all this knowledge. And so that was also coincided with us selling the firm to Goldman. So it was an opportunity. We had a do not compete. We couldn't do exactly that, which was for me a relief. For the founder, my father, definitely identity crisis. What am I going to do with my life kind of thing. But for me, I was like, oh, we don't have to do that anymore. We get to do all these other things. And that's when, about the time I believe we met, I started impact investing in 2007. Had the very first 100% impact focused foundation endowment in 2007. And of course, I didn't predict things the way they did, but boy, was it really great to be out of equities in 2008. And I had chose some cash alternatives. We identified 7 community banks. We're diversified across these different banks and had done a few different fixed income things. So we were up 2% in 2008 when foundations nationwide were down about 8%. So at any
Nice.
rate, I kept going. I ended up doing some consulting with foundations, endowments, family offices, and to try to help them start their impact investing journey. And some of them were ready, but most of them I saw really stuck in public equities. And it occurred to me, okay, if this is where they're going to be in public equities, we have to really harness and bring as much impact as possible to the equities markets. And we can do that. We can do that. And so that's what NIA is. NIA means intention and purpose, and we design very thoughtfully constructed, impact focused, almost like a VC play in public markets, public equity portfolios. So we now run 4 SMAs, which are separately managed accounts, available on about 10 platforms. And then we also have a mutual fund that can go in everybody's 401k. And that's a big part of our theory of change, is being able to democratize access. So being in public markets where there's daily liquidity, you can come in today, leave tomorrow if you want to, get this in your retirement account and build from there.
And so and do you consider yourself an ESG? I know that term means different things to different people, but in a sense, you're more proactive impact than conventional ESG, based on what you just said. You're looking for companies who will have a positive impact in the world with what they do, and at the same time generate returns to investors. Is that a fair statement?
Absolutely. So if you ask your friendly audience, I'm going to tell you what you want to hear. But of course, we were doing this before the ESG, environment, social governance, was kind of a thing. But then
Yeah.
it does really encompass very well what we are doing. And yet there's a backlash right now. And
Yeah.
um, so for some, I want to say, yes, we're absolutely doing this, and that's what we're doing. Impact focused, and using the E, the S, and the G analysis to actually reduce risk and to increase our alpha, to increase our return on investment using these different criteria. As we move into this next, I guess we'll call it a presidency. I don't even know what to call it anymore, but we'll see what terms are using, because what we
Yeah.
really want people to understand is that, yes, this is important. It's also smart investing. It's just smart investing is looking at all the possible risks and looking at all the possible ways that a company could be doing well to have return on investment. And so it's a deeper, stronger due diligence method, if you ask
Mm,
me. So I don't really care what you call it, but it's definitely
mm.
going to be controversial what we call it.
But it seems to me, and this is from earlier conversations and following a bit of what you've been doing, but you're different than a typical ESG fund in that, you start by trying to find companies that will generate, meaningful positive impact in the world, as opposed to using, environmental, social, and governance risk factors to, in a sense, I don't know if I'm not being articulate now. That there's sort of a proactive nature of what you're doing, which is different than a lot of ESG funds who are largely trying to replicate an index, but with a set of stocks that, in a sense, do less harm to the environment or society than others might do. Whereas, in a sense, you're a stock picker, not an index manager. And I can see, I remember when I looked at some of your materials really early on, you brought to it the impact investment mentality as opposed to a portfolio, a passive portfolio manager mentality. Is that a fair statement?
Yeah, 100%. 100%.
Yeah.
And I love that you're bringing up I wouldn't call it a dichotomy, and yet um, the ESG, so many definitions, people, you could use it kind of everywhere, but yes, we are very much almost like a VC play, and we are specifically trying to move people away from the index, whereas I believe a lot of, I guess, our colleagues, competitors, I would actually say our strongest competitor is the status quo and
Mhm.
the S&P. It's the old way of doing things. There's definitely
Yeah.
enough room for all of the managers that are, trying to do something different. There's market share, there's addressable market. We've got that. So I guess I'll call them more colleagues than competitors, but the
Yeah.
others doing this type of work um, are basically saying, hey, you can have the same thing as your index. We're just going to take out a few bad players, but it's going to behave exactly the same. And we're
Right.
saying, wow, this indexing started to be invented in the 60s based on what was called, and still to this day is called, modern portfolio theory. And,
Mhm.
60 years later, nothing is modern. um, Also, academic theories across disciplines get updated every 5 to 10 years. Why is it our financial industry is holding on to this
Yeah.
thing they're calling modern portfolio theory that wasn't correct when it was designed? I mean, of course, and again, all men at the table, not to diss any of the beautiful white men on this screen, but it's just we need diversity of thought. We need, nature thrives with diversity. The financial systems will thrive with diversity of thought. And, so that's when I say that, it's, please know that I'm not, we need all the good men doing all the things, and we need to work together.
Well,
I will probably
we
mention.
refer to modern portfolio theory in our course as a backward-looking theory of speculation built on flawed statistics. So no need to be
Okay, you
defensive
all got
here.
that. Okay,
Yeah,
yes.
yeah,
So,
yeah,
and at that time, the men designing those theories, why they would have thought this, I don't know, but they did believe that we lived on a planet with infinite resources. So you
right,
could expect infinite returns. Whoever thought there were infinite resources, I don't know, but my
right,
understanding is that that's what they thought at the time. And so you could have infinite financial returns because you could cut down as many forests, drill as many things,
right.
So at any rate, you all have covered that. Modern portfolio theory
Yeah,
has some flaws. So indexing is based on, largely comes out of that Chicago school of thought,
right.
that you need to own a little bit of everything, and that you can design financial products based on size. That is clearly a male concept. I'm just saying. Domicile, women would never have designed products like that. Women want
Yeah,
to know, what is the company doing? What is the
yeah.
core source of revenue? What is it designed to do?
So tell us,
Is
like,
that a good
what are like one or two of your favorite companies in your portfolio, and why they fit your thesis? And then and second question is, um, this whole indexing thing. I mean, are you not forced to compare in your marketing materials your quote performance against an index? You're kind of trapped in that world a bit, aren't you?
trapped? Yes, we're trying to break our way out. Yeah,
Yeah.
so in our marketing materials, to be fair, you want to see how our portfolios are performing against what you would otherwise be investing in, right? So that,
Yeah.
so absolutely, we don't mind showing you, but what most managers and how, as I think you're referring to and mentioning, is that the system is set up that we're supposed to be mimicking that index, both on the risk
Yeah.
side and on the return side. So alpha, beta, et cetera. We're not, and so it depends on who I'm talking to, but we're trying to say that system is flawed and we are building this other system based on these companies that are actually doing good for the world.
Right.
And so, yeah, so we do show our portfolios against the MSCI ACWI. It's a all world global. We are capsize agnostic, meaning that that's not our first thing that we look at. We do build a
Mm.
diversified portfolio and we love having all the different capsizes. When I started this, to start designing this based on solutions themes in 2012, I didn't think we'd have any large cap because I couldn't find any companies that I thought would have enough of their revenue coming from our
Mm.
solutions themes. And yet that really both has changed and
Mm.
the world has changed a little bit and companies have stepped up as well.
So what's a
Um,
couple of your favorite companies that are doing good in the world?
so they're all my babies, right? So we've select them all. All of the companies have revenues coming from one or more of our six solution themes. And so I'll just mention that we built those based on systems thinking. Um, And so looking at what is needed for people and planet to not only survive, but to thrive together, and then what will the market reward for? So basically, what are those companies that are helping us transition from this incumbent extractive economy to a regenerative, solutions focused, both innovative and inclusive economy. So that's what we're looking for. We're looking for those companies that are going to get that TAM, that are going to get their revenues from that transition and getting us there. So all of our companies have revenues from there. And then also all of our companies, we do require diversity in leadership in all, both on the executive team and on the board of directors. So that's a basic criteria. Some of our portfolios need the additional criteria about having to have a dividend. Our US racial justice portfolio has additional criteria. But at any rate, so some of, let's see, kind of a classic that
Pick,
you'll actually see in
pick your two
other.
favorite babies.
Okay, so I'm not doing favorites, but I can't do favorites, but I could say Xylem is a water technology company that's been a favorite for a while. They're largely in infrastructure as far as pipes. They're very helpful. We just wrote them up in our climate disaster preparedness report based on pumps and systems for municipalities. So all of those things are good. One of the things that we love about them that I guess I'm picking them today is that they have piloted different types of hiring programs for partnering with local prisons. And so they are taking,
Mm.
unchecking the box and really thinking, do you need a college degree or how can this work? And so their hiring practices is one of the things that
Mm.
they're a game changer on multiple levels. So that's probably on infrastructure.
Mm.
Another one today, I guess, actually just coming off of Thanksgiving and watching my nieces and nephews on their Duolingo. We've been really cautious about AI. We need to know with as much certainty as we can that products and services from a company are going to be beneficial. AI, obviously, we're all in this, and it'll be interesting to see where we go with this as a nation, as a society, as a, whatever, but I'm not convinced, both on the environmental side, and then
Mm.
also because we don't have enough diversity at the algorithmic table for AI, that we're not going to have we don't say blind spots, but some issues. So at any rate, we're looking for those companies that are doing really well. Where is AI best used? And Duolingo is a really
Mm.
nice example of that. So it fits a lot
Mm.
of educational things, it fits use of technology, and it fits a piece of empathy. That is, when you learn a new language, you then can learn a new culture, and you can
Mm.
then
Mm.
and that could actually help bring world peace ultimately. So
Mm.
that's a pretty far
Yeah,
thinking.
no.
So anyway,
And
so those
for
are a
that
couple.
same reason, though, is it fair to say, even if you owned, say, Microsoft or Google previously, given their role in AI today, that would cause, no matter what you thought about the financial prospects, you would not own it because of the AI reservations? Or is that too
So
strong?
that's too strong. We could well, let me just jump over to one that we do own that we've owned for a long time is IBM. And they are also lesser known, super old school name. And yet when we purchased them first in the portfolio years ago, they did have a strong woman CEO, which was an interesting one of our
Yeah.
criteria. Would never pick a company for a woman CEO. And sometimes that can actually be a red flag because companies will actually, sadly, oftentimes get to a really bad place and then they put a woman as a CEO and then they have to try to save the whole thing. So sometimes we're like, I don't want that company. They've got a woman CEO right now. I do love
Mm,
a woman CFO. That is, and if a woman CFO leaves the company, but anyway, so there's some criterion there. But what we did do with IBM, um, and this is back before AI was really a topic, but we knew that the innovations, and that was actually why we invested, is because we saw them doing innovating before this was coming up with Microsoft or Google, et cetera. And we worked with them on their diversity reporting. And so we actually
mm.
won a resolution at 94% of the vote there. So I know we're going to talk about some activism. And so this will
Yeah,
just
yeah,
bring a little
yeah.
bit into that as far as it was really important for us that IBM was doing their diversity reporting in a way that made sense. We needed to see them really paying attention to who was at the table in leadership and in developing these products. And so we did do quite a bit of work, dialogue, over a year-long process. But we did win that, and they have
Mm,
increased their diversity reporting and their transparency about these
mm.
numbers. So that's
Cool.
how we're trying to
So yeah,
affect.
I do want to come back to your investor activism piece in a second, but just before we go there, maybe just share with us sort of how you have processed this, what I'm calling the ESG blowback, the sort of shocking, I mean, I've been, as I think I've been sort of somewhat of a cynic about the ESG hoopla over the years. And, it's never all good, all bad, but there's been a lot of hype around it that have felt is, radically overstating the role that, investors can have in their selecting their portfolios, particularly when they're still largely trying to mimic an index and do it in a way that sort of is a little greener, a little nicer, or whatever. But I certainly never would have thought that the reaction that, investors have become too woke would happen. I mean, it's just shocking to me. And I'm just, you're much closer to it and deeper in it. And I'm just curious how you're processing this phenomenon, or is there any insights you can share with us that help us understand what's going on, or is it just our divisive politics and it's no more complicated than that?
Um, I don't want to say it's complicated, but one, it wasn't that many years ago where nobody had any idea what I did, or what we were doing or what this
Right.
movement was about. So I have to say there's something about getting big enough that we are posing a threat. So that's
Yeah.
kind of a good thing, So I'll have to
It's
say
like
the
the
fact that
expression, first they ignore you, then they hate you, then you win, or something like that.
I like the then you win. Let's.
Yeah, we're not quite there
Um,
yet, but
Well, so our economy and our earth and our society need us to win. So let's hope that there's some survivor instincts among some of us, But
yeah.
yeah, so it's pretty bad this, but the fact that we're getting the press and the headlines, I think is a good thing because what it's helping to do, in my opinion, is wake people up. And where do you stand? Do you know what ESG is? What do you think about it? And I mean, for our goal is we want people to be very conscious of their investments. We want people to know what they own. Um, Ideally care what they own, right? I mean, everyone cares because we're looking out for our future and we need growth because we don't have a society that takes care of us in our retirement. So we actually need to have some money. So how are you going to make that money? But we certainly haven't grown up learning about how to do this, unless you were sitting in the backseat of the station wagon with me. But most of us didn't have a curriculum in high school, college, etc. So most of us almost by design are unconscious about our money. And then you layer on this whole indexing where you've got, the S&P 500, the MSCI could have 8,000 companies at any given time. And then you've got financial advisors who are using indexed products like stocks. So they're diversifying your portfolio by putting 15 or 20 of these funds that each one of them has. So no one basically is watching the ship. There's no one has any idea. You can't
Mm.
name 500 companies or track them. You can't name 2,000. So anyway, this ESG thing is asking us, what do we own? What's in those companies?
Mm.
Who's going to do that? So I welcome it in that way. I'm very cautious, as we all are, when someone's criticizing something, why? And then also, in this industry, you learn you have to follow the money. So who's the one criticizing or the groups criticizing? And it's largely, coming from the fossil fuel industry and those people that benefit from the fossil fuel industry. So no surprise, they don't like
Mm.
ESG. And so they're going to say it's bad. That doesn't mean it's
Your
truthful.
perspective is it's more fossil fuel industry related than political? Because it feels to me it's more, you know, red blue divisiveness. And the other thing we should say, this is primarily a US phenomenon, much more so certainly than Europe or, to my knowledge, Asia. Is that a fair statement?
Oh, absolutely. So even
Yeah,
my understanding is that in Europe, they have political divides and everything, but they all understand that the environment is at risk and
right,
they need to work on that together.
right,
And they're
right.
not confused
And
about that.
regulations are getting more strict, not being lessened. So
That's right. That's right. So
let's
yes, I mean it is political as far as red blue. And yet who's in charge of the red
yeah,
infrastructure?
yeah,
The
that's
people that benefit from the fossil fuels. So you could kind of separate it, but not really in my head, because it's
mhm.
it's who's calling the
It's
shots
an
over there are the
overlap.
ones that benefit from the fossil fuel
Yeah.
industry, and which is interesting. And actually, I'll find this and put it in the chat for those that haven't seen it. A study that came out last fall. I want to say it was the University of Wisconsin, like a red state kind of thing. But at any rate, a 10-year retrospective study of pensions that um, were fossil fuel free did better than those that had fossils in them. So the argument has so many holes in it that ESG
Mhm.
doesn't work, and yet their
Mhm.
voice is really strong. So
Yeah.
it's going to take the underdogs or those of us doing the work to really get strong as far as our
Yeah.
marketing, our amplification, and our research to share, that
Yeah.
our portfolios do outperform and over this time period and, without weapons, without firearms, without, all those
Yeah.
things.
So one of the things I really want to get to, and when you say doing the work, there's I made this play in the framing of this, the difference between activist investors and investor activism. And one thing I know you guys take very seriously is your responsibility as shareholders. And you were starting to talk about, or you did talk about some of the work you did with IBM. But I'm intrigued to hear your in fact, I think this is how what triggered me to reconnect with you. I saw something about you. You went on down to Austin to the Tesla shareholder meeting. And so that tells me, first of all, you probably own some Tesla shares in the portfolio. And so there's a huge in full disclosure, I just leased a Tesla for the first time. And so I'm conflicted myself with, is that okay? And it's a great car, and no one's done more for promoting electrification of vehicles, I would say, than Elon Musk. But I decided I could justify driving the car because I'm going to get a bumper sticker that says Ford and Edison were jerks too. But I'm curious if you can share with us your thinking about the company, assuming you were a shareholder, which is why you went to the meeting. And then if you could share with us what happened at the meeting, because I think it's an interesting example of what the work you're actually doing, other than deciding whether or not to own a particular company's stock at a particular point in time.
Sure, sure. So Tesla is the one that everyone wants to talk about. It's the most controversial. I mean, it really is the most controversial. We did invest really early on. I want to say, well, it was in our beginning portfolio, so 2012, back when, to your point, that company was disrupting the
Yeah.
entire way we think about automobiles, in the tire. So, love him or hate him, no one can argue that, they didn't really disrupt the way we think and really catalyze some big change. And that's what we're about. And we were on them for additional diversity in leadership at the time and watching. I'm not a car person per se, and I really, as far as solutions, I really want to see public transportation take off and walkable
Mhm.
cities. And so I would, in my ideal world, reduce the amount of cars and really put in better infrastructure to move people and things. And then also, I'm really into local economies. And so, anyway, so that being said, America's into their cars. And I was particularly interested in Tesla in the battery play. I think the battery, particularly when there was a merger with the Cousins company and the solar panels and the battery. And so that, way back when, that was my interest. That being said, we do watch all of our companies very, very carefully. So that is us being concentrated portfolios. We cap our flagship portfolio of 50 companies, and we get to know them. And we're really trying to make this more relational. So we build relationships with employees, with to the extent leadership, certainly investor relations, et cetera. Very hard to do at Tesla. Let me jump forward and just say that um, we've removed Tesla from client portfolios because we saw the risks. And one criteria that we have for all of our portfolios, as we believe everyone could or should, is that the CEO must report to the board. And that is not true at that company. So we see a lack of the G as far as governance and strong governance. We want to see better governance in place. But we also identified rampant racial discrimination. And we did that just as we were starting the pandemic. And so I remember sitting at my kitchen table alone on Zoom with so many Tesla employees, former Tesla employees, current Tesla employees coming to me, Zoom screams full of hiding their identity because they were completely scared of retribution. Retaliatory firing is 100% real there, and they know it, and I knew it. One of my neighbors actually worked for Tesla, and they sent him out on a project to go do something, and he came back. His entire team had been fired that day. He had two little kids. He ended up, getting a job at another company because he couldn't take the risk of, so the people who can work there. But at any rate, the discrimination, we were seeing that, and they have forced arbitration. And so we have worked to remove forced arbitration successfully from several other big companies. And so we went to them and said, that this could be inhibiting your ability to build a really innovative, inclusive work culture. And, Tesla, as we all know, is built on innovation. So we need them as an investor to be able to continue that innovation. And that means being able to hire and retain top talent. And so there's an investor concern about that. There's also a moral concern, that you're hiding a lot of rampant racism and that people can't sue because of this forced arbitration clauses in employee contracts. So at any
And
rate,
who were you able to meet with at Tesla to have that conversation? The investor relations person?
very few people. So investor relations, who largely ignored us, ghosted, lied, did, all sorts of different things, we also had questions, concerns, issues with the child labor in the mines in Africa. And also just knowing that the company could, with a few $100,000, like a minimal thing. And we're talking about the richest man in the world here, could get those kids out of those mines, could provide lunch for them, could set up a school on the side of the, like it could be the PR story of the world with a tiny, pennies for him to get those kids out of those mines. And they were refusing, and they argued
Just to
with
be
me
clear,
about.
this is the lithium mines that are his suppliers. He's not employing them, correct?
No, exactly. They're
Yeah,
in his supply chain. They're in his
yeah,
supply chain. Mhm.
yeah. Yeah.
Yeah.
And so you went
So
down to Austin this summer or whenever it was, I think late
I've
summer.
been twice. Yeah. I've gone 2 years
And
in a row. Hmm.
and just tell us, I mean, I know we have a video we'll share in the chat. Maybe I just worried about our time.
Yeah.
But share with us like what that was like. I mean, it's the culture at the annual meeting of Tesla is a little bit of a bro rah-rah show. But you know, you show up with your long blonde hair and in a room full of largely men and you have some issues about employment practices and whatnot and just help us understand what that was like for you.
Sure, sure. So it's not for the faint of heart, definitely. It is 100% a bro show, and it's pretty incredible. It's not like another investor meeting. Investor meetings are boring. They're by definition, they're boring.
Yeah.
You've got the CEO makes some statements, maybe the CFO talks about some earnings, maybe you'll see a little video of some new product line or whatever, but this is like this you have that's a lottery to get in, like
And
everybody
Marie,
wants to get in. It's like,
uh,
it's this whole it's thing. And when at the end of the presentation, it felt more like a rock show, a guru, like it's almost like Jesus Christ um or Martin Luther King or Hitler. Like it was that kind of a following, it was that kind of an energy. And I knew that had they served Kool-Aid, every single person in that audience was drinking it. And I was so it's
but
a
they're all
real
investors. This is an investor meeting you're talking about.
yes, you have to be an investor to get in. Hmm. Yeah, I don't. So what we did is when we removed Tesla from our client portfolios, we moved it over into our firm portfolio, and we're calling that the activist portfolio because we could just remove them and move on and say, okay, we identified risks. This doesn't fit our thesis anymore. We're moving on. But we've met so many of these employees, and so we're dedicated to continuing that change and to reducing to
Hmm.
eliminating racial discrimination.
Hmm.
And so that's why we hold on to some shares because as
Really?
required by the SEC. So the reason I got to go was because we had filed a resolution with the SEC, and then it goes back and forth. So you file, and then Tesla gets to say, that's not true. We didn't do those things. And then we get to say, actually, here's our evidence, da, 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 and so it's a little he said, she said, and then the SEC decides. And they ruled with us and said, yes, this goes on the ballot. You have not addressed this, and then shareholders get to vote. So I was there
So,
to give a
so,
three
so in
minute
order
speech.
for you to file a shareholder resolution, you have to go through this process, win the
That's
process, then you can show up and have it voted on by the shareholders.
exactly.
And that's what
Exactly.
you did. And you were down there to present that resolution.
That's right. That's right. And so I was the only shareholder 2 years in a row to show up in person. And so largely the shareholders that are doing this work, ironically, are women portfolio managers. Definitely they're the ESG, they're the very small company. So I mentioned that because, earlier we talked about these statistics. What would it be like if more people showed up against the status quo? So I knew that it's not a friendly audience. I knew it was going to be very controversial for me to be there. And I try to make friends, and I'm just like, hey, what brings you here? Or I'll say, how did you vote on proposal
Hmm.
number 7? Or I'm curious what and so I kind of let people know that I'm there because I love Tesla. I want to see it succeed. And we think it would be better and more successful if they did these things. So I'm not trying to say I hate you all and this is a terrible business model. And I bring that up because there are those types of
Yeah.
shareholders and that so activism is almost like ESG. It has some different we think about it really differently. You all probably saw in the news there's activist shareholders oftentimes from hedge funds, but certainly in the case of Exxon, Chevron, et cetera. So Exxon had some activist shareholders where they wanted board seats, like they want to change the business model. And so we're not that kind. We choose our companies because their business model really does meet one or more of our solution themes, and we see them as a vital company. We just want to help them improve on various practices so that they can hire, promote, retain top talent, in this case, have a really strong company culture, which we found in our portfolio across the board in the pandemic was key. Business models needed to shift. There was
Yeah.
lag, there was work from home, there was all this, but if you had a loyal employee base, you did better during that time. So at any
Right.
rate,
Right.
we're not trying to take down the company, but being at that meeting was
Or the management, which is what activists often are trying to do, is to trigger a shift in management,
right. That's right.
which is a catalyst for the stock price to pop in the short term, and then very different kind of activism than what you're doing. But anyway,
Right.
so you made your spiel about labor practices, and you got a big round of applause, and everyone came up and hugged you.
Okay.
Not quite.
Okay. So the first year I went last year, you have to present, but because of the pandemic, that things have shifted. So you can present via recording that you submit ahead of time. And so during the pandemic, that's how we presented all of our resolutions. That's how I presented our winning resolution at Apple. You don't get to go to the shareholder meeting, you just did it. And we ended up winning that and changing, getting NDAs out of Apple employee contracts. But for Tesla, it felt more important to go in person. And so at any rate, the nuns who I talked about the child labor in the mines, they really wanted to take that issue. And we were already addressing forced arbitration and racial discrimination. So we're like, okay, we're going to stay in our lane. There's so many issues at Tesla. We're going to stay in our lane with racial discrimination. And the nuns, who were largely standing on their shoulders. The nuns have been doing this SRI and shareholder engagement from, before I
Forever.
was
Yeah.
born, probably not that long. I'm old, but they've been doing it for a long time. So we're like, okay, the nuns want the child labor. So they read their speech and they got booed. They got booed. So basically most of the resolutions got booed. But I think the fact that I kind of made a few little friends, Bill, I mean, I didn't have like a full posse or anything, but I had, kind of talked to as many people as I could to let them know that I was a friendly being. And then I also put some Tesla language in my speech to make it kind of funny. So instead of looking under the hood, I said, when you look under the trunk, and so then we've got to, so I'm kind of strategic about trying to,
Yeah.
get some. So at any rate, we did get more than 30% of the vote. Even though when I'm in everyone I talked to before my speech, like, oh, how did you vote on this? They kind of look at you like deer in the headlights, like, what are you talking about? Like they all vote with management. They all do exactly what Elon wants them to do. And so they voted no on all of the resolutions without even reading them. So they didn't
Right.
even know what the concerns are because they just all vote no, and they're trained to do that. And that's largely true of our entire economy. It's exacerbated at Tesla with the guru status thing, but I mention it
Mm.
because most companies vote with management, most investors, asset holders, et cetera, and we could change that. We on this screen can be part of changing that.
And in that case, the big index funds, the BlackRocks, the Vanguards, they're not even there, and they just vote with management.
Most of the time, they vote with management.
So
Mhm.
your view on the big index funds, you know, taking any responsibility for companies behaving properly, ethically, in the long-term interest of the business you're pretty cynical, having played in that sandbox for a while. Is that a fair statement?
They are firmly attached to the status quo. And I don't know if it's cynical. I mean, I guess, yeah, I don't know. I mean, everybody could change at some point. We need um, the entire system can change by investor request and investor demand. So if their investors said we
Right.
want these things, but we're just all so far removed, so yeah, they do vote with management. But here's the other piece is that, as I explained, we get all of our attorneys lined up. We spend all this time writing these resolutions because you have to write it in a certain way for the
Mm.
SEC to even be able to take it seriously, approve it, whatever. It's very hard to get through the SEC. And so we've learned a lot of things. So we don't say like, we want Tesla to remove forced arbitration from employee contracts because we see that it's associated with racial discrimination, sexual harassment, et cetera. Well, you can't word it like that. You have to say we would like to see a study of the amount of money that Tesla is spending on lawsuits to defend these things, and
Mm,
and does that make sense for them? And
mm.
then if you get to see how much money they're
The
spending
business
in legal
case,
fees,
the
yeah,
business
exactly.
case
So
argument, not the ethical
it's
argument.
100% business case, or we do it as, and that's actually where we're coming from. We come from both
Yeah,
ends. That it's
yeah,
we
yeah.
were we're trying to make a
And is
really
that
strong business.
true internationally, or is that a particularly American legal issue?
The SEC resolution process is just for our American companies, our
Yeah,
US
but I mean,
domiciled.
if you're trying to promote, if you're trying to do investor activism in Europe, is the process in a sense more friendly to you, or is it just different set of regulators but similar process?
Yeah, so we can't file resolutions in Europe or anything. I mean, the thing about Europe is that for most of at least our diversity criteria, mostly they already have regulations in place. They already have regulations about, like, when we're
Right,
talking about reporting out on scope emissions, carbon reduction, they agree with the Paris alignment. So they're already doing those things. So it's actually much
right.
easier for us to invest in European companies because we don't have to do all this work for the
Yeah.
most part,
Well,
for
I mean, to me, that's the takeaway from this is the amount of work you're doing, which costs money to do, comes right out of your margins. And you're a relatively small asset management company, whereas, BlackRock and Vanguard, who are the gorillas, they'll talk about how they've got 40 people working in their governance department, but that's 40 people across, trillions of dollars of assets and thousands of companies. And they're not doing anywhere near the amount of work that you're doing. And in my opinion, they've completely abdicated their responsibility as investors, and they're essentially a technology platform to help people speculate in stocks. And so the whole system is broken. And I really give I applaud your tenacity and patience and doggedness and hard work for doing the work that investors are supposed to do. But you know, there's nowhere near enough of you that are actually behaving that way. So I really want to applaud you for that. Um, I have one
Tony.
last
Thank you.
topic I want to ask you to share. This was something that you mentioned in an email. We've had an election in this country, and democracy is now a topic. And you seem to connect your investment activity even to the protection of democracy. And I'd love to hear your thoughts about that. I have no idea how you think about that.
Yeah. Okay. So let me just go back real quickly to the shareholder stuff because I think this is an important point in that, not only are we doing this huge amount of work that, we'll never recoup, well, actually, that's not true. We could grow. We will grow. We are growing. We are at a half a billion now. We need to be at a billion. To cover all of our costs, and then we could be a 5 billion firm, which still is a tiny, tiny, tiny,
Right,
asset management,
right.
but we are on our way. Like, and it is a snowball, and you do grow it. And I mentioned, we have this mutual fund. Once we get it out into everyone's 401ks, we'll have at least some chances of bringing in, some revenues to be able to pay for more of this type of work. It's a
Yeah,
passion project, but it also does strengthen our portfolio. And I just wanted to mention that because two things. One is you talked about the Vanguard, State Streets, Fidelities, BlackRocks. They don't even have to do the work that we do because they can pick up the phone. They own 5%, 6% or more of each of these companies. And they don't have to go through. They've got back channels. They just, you call Tesla, you call the CEO, they pick it up and they make changes based on these, so um, when you own that many shares, it's not only are they not doing the work, they're really stopping the progress, and they're really, so I just wanted to put that out there that it's not even
yeah.
enough work for them to make change if they wanted to, and the least they could
Well,
do
and
is
it's
go
I would
for
even
our.
say it's even worse than that. I have a friend who's a director of a very large bank, and he shared with me that he had the annual meeting with the ESG analyst at, I don't know, it was BlackRock or one of those guys, and they had a nice polite meeting, and of course it was a she, and she was about 28 years old. And here's a guy who's a, 60 plus year old director of this big bank. And they kind of like played the game, but then at the end of it, the understanding, he said he didn't even need to say the words. The understanding was, yeah, I hear all these things you want us to do, but we both know you're not going to sell our shares because we're in the index and you can't. So thank you very much for your ideas. Goodbye. And it's almost like once you're an index fund and you're that big, everyone knows that you're not really there as an investor. You're there to check a box or whatever. And yeah, they listen, but they don't really listen because they know you're not going to sell the shares.
Okay, there's that too. That's a super important point. Yeah, because so back to my earlier point, why
Yeah,
are we building portfolios based on domicile or cap size? Because,
right,
then you don't have the leverage that we do. So being an active, there's a lot of reasons. Um, and somebody put out there sometime a research project back with modern portfolio theory and those things that active management could not outperform passive management.
right.
My understanding is that there were no women portfolios in that study. I mean, excuse me, no women portfolio managers. So I'm trying to get a hold of
Mm,
who did those studies and why they're not being updated.
mm.
Because the sample size, whatever, it wasn't. I've got something to say. Because we are outperforming and we are active managers, and I don't want the blanket backdrop to be that you can't outperform because our
Yeah, that's because the
society.
University of Chicago theorists say that it's impossible, but that's a whole other conversation. Well,
Right.
this is
Okay.
we will ask you to put your website in the chat before you leave so that people can look at your work and inquire about investing if they choose to. Just to be clear, Capital Institute's not in the investment advisory business, and Kristen's here because she's a colleague and doing important work, but I can't make recommendations about investments. But please do look at Nia Impact Capital's website if you're interested to learn more. And before we bring others into the conversation, so just to finish up on Tesla, so they didn't give you hugs, but they didn't boo you out of the room, it sounds like.
Right. So
And
I
you got
didn't get booed. I didn't get booed. I was the only one to not get booed. So
to,
I'm calling that a win. It was silent and uncomfortable, incredibly uncomfortable, but I didn't get booed. So and there were a few women and people of color in the building who kind of gave me some looks like, thank you. And then they had a Tesla person drive me to the airport. A lot of people went to the after party and whatever. I needed to get out of there. I need to get out of that state like as fast as I could. I was like, got to get out of here. And the woman of color who drove me, I had to do a couple interviews. I think I was on the phone with the New York Times or Reuters or somebody in the car, and it was really uncomfortable. Like, I had a Tesla staff member here, and I got to report out on what this was like or whatever. And so I just said to her, excuse me, sorry, I got to do this call. And so she's driving me, and when we got there and she dropped me off, she said, I don't really understand what you do, but thank you so much. We need you so much. And I gave her my card and she linked in with me and, whatever. So just speaking out can have ripple effects, here and there and those
nice.
places. And so just mentioning that we did get the 30% vote. And if any of you run companies, and you had 30% of your investors saying this thing was important, wouldn't you want to find
Right,
out more about that? Would you just
right,
throw it under the rug?
right.
So that's also interesting because I think Tesla and many others consider like a win-lose. And if you don't get more than 50%, you've lost. But if you've got 30%, and this is interesting just because I don't want to go too on about this company, but he at any given time owns 17 to 23% of the whole company.
Right,
So those are all no
right.
votes already. All of the board, all of the management, and he trains most of his investors to vote no. So the fact that we got 30%, like that's huge.
Yeah. You
But it
probably
didn't
got
get
two-thirds of the real eligible vote.
of the real vote, right? So
Yeah,
anyway, so there's that. There's and the issues go on. So we are filing again
right.
this week with Tesla and taking a different approach about board responsibility for DEI, given the backlash and where we think we're going with democracy or lack thereof moving forward. So we're shifting our approach a little bit. And that is what we do is we try different things. We're not waiting in the back of the bus to see what everyone else is doing. We're like, okay, we got 30% with this. Let's try this and, and see where we can. So we're a little experimental, as well as methodical and
Mm,
strategic.
beautiful.
You did ask about
And
democracy. Oh, go
yeah,
ahead.
real quick, what's your democracy investor pitch?
So at any rate, we did show our democracy data, and we have a Change the Face of Finance internship program where we train young people in sustainable finance. And we have them do a lot of this research really as a teaching tool, but we do have them pull up all of the political giving for all of our companies. And we look to see how big, how red, but because of the solutions focused companies, it's no surprise to us that we are actually running a blue fund, um, which we're not marketing it that way, and yet probably important to know. And I want everyone to know and be in agreement with, do you have companies that are doing political spending to promote democracy or lack thereof? And what does that look like? Because our investments actually, because of our laws and lack thereof in the US about political giving, we investing is political.
The data you're collecting is who are they writing checks to,
Mhm.
and are they Democrats or Republicans? But is it also issue related data, or is it more just how much are they giving and to which party?
And no, we haven't gone on an issue related. No, we haven't. It's more on the PAC money and the C4 money and then specific candidates, not on issues. I mean, some CEOs stand up on issues, and that's just kind of an interesting thing. And I do go into that in the webinar about what that could look like. I believe it was Netflix. We don't own Netflix. No, no, we own a little bit in one small portfolio. But at any rate, the CEO in October stood up in support of Kamala, without recognizing or maybe that was just an important thing but it is political because a lot of their users were in red states, and dropped off and discontinued. And it was convoluted because it was also at a time when they were changing their subscription models. But at any rate, it is political in this country.
Really amazing. And again, I just want to I'm just, if I think about so many people who work in finance, trading stocks, investing in stocks, and the amount of time that you put into these important issues versus what 99% of the people that work in the industry do is quite extraordinary. So I really want to applaud you again for that. I kind of knew that was going to be the story, but just hearing it today, it's really heartening, and I thank you for doing that. Thank you again for joining us today, and most importantly for the work you're doing in the world. I applaud you, and I know everyone else here does. And thanks everyone for joining us.